What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking about a brand new company to the channel, and that company is called Can-Be Corp. Now, Can-Be is a lifestyle and wellness company in the MJ sector. So this is a full overview. We're going to be taking a look at the charts. We're going to be taking a look at some interesting articles, going into their website and seeing what they're all about. Last but not least, I did want to say this video is a sponsored video, so check the description down below for full disclosure details. This video was sponsored on behalf of Can-Be Corp. And yeah, let's get straight into it, guys. So I hope you enjoyed this video. Let me know in the comments what you think. Feel free to drop any comments along with exploding that like button for the channel. It helps my videos so very much, and it helps with the algorithm, along with catching that subscribe button and hitting the market bell for notifications on future videos, new and exciting companies just like Can-Be Corp. So first, let's take a look how the stock has performed over the last 3 to 6 months. So it does have a 52-week high of $2.11, currently trading for 80 cents. It's traded on the OTC markets under ticker symbol CANB. I did want to note to potential investors that, small cap stocks tend to be highly volatile. Always do your own research and due diligence before investing into these companies. And of course, this video is not financial advice. We also do have a full disclaimer, and I highly encourage you guys to read that before investing or, watching this video. So let's dive into this interesting article from MarketTrendsNews.com about the company. So Can-Be Corp, a health and wellness company. So the green boom market exceeded around $2.8 billion in 2019 and could hit approximately $89 billion by 2026. As the green boom becomes more mainstream and widespread, Can-Be Corp could potentially be a powerhouse in this market. So Can-Be Corp closes $2.8 million new financing. Times are changing. Green boom, which once was delegitimized and stigmatized as a harmful substance without health benefits, now appears to be here to stay. So increasingly adopted and accepted, the green industry is showing robust growth potential for the coming year after Arizona, New Jersey, South Dakota, Montana, and Mississippi all legalized. Over half the states in America now have some form of medical or recreational use. So one thing about this sector, the industry as a whole has immense growth potential with roughly a compound annual growth rate of about 28%. So as we know, a lot of stocks are doing very well in this sector. The MSOs are doing very good. So especially with the new administration coming into power, this could be an interesting time to revisit this sector because we used to talk about it a lot. So according to Global Market Insights report, the market size is expected to exceed around $2.8 billion in 2019 and could grow at around a compound annual growth rate of 52.7% between 2020 and 2026 and hit a global market valuation exceeding approximately $89 billion. That's almost $100 billion. Let's see this article's, top reasons to consider Can-Be Corp. 2020's election night was a possible tipping point for easing this green boom regulations, as majority of Americans now seem to have some kind of medical or recreational access to this. The green boom stocks appear to have performed strongly since Joe Biden's election win. More federal policies in favor of this sector are being anticipated under Biden administration. For example, the House of Representatives already voted in favor of removing the Federal Controlled Substances Act targeting this sector, and Biden hasn't even taken office yet. So the global market is forecasted to grow at a 52.7% compound annual growth rate between 2020 and 2026 and hit a global market valuation exceeding approximately $89 billion. With the potential upside in this market, Can-Be Corp stock appears to be surprisingly cheap. With a small float, Can-Be stock appears to increase on good news. So this is a low float stock, highly volatile, and any piece of news, any new buyers coming into the market or new investors, these types of stocks tend to move a lot on good news. So keep that in mind, guys. The company appears to have a strong gross profit margin, solid short-term solvency indicators, forecasts net income growth and returns. Can-Be appears to have strong returns and fundamentals. This is a company operating in a high growth industry while trading at an undervalued price with some actual fundamentals and technicals to back it up. So Can-Be's latest 12 months gross profit margin is around 92.4%. While this appears to be impressive in its own right, it looks even better when you realize that Can-Be's gross profit margin for fiscal years ending December 2015 to 2019 average approximately 75.4%. So by the looks of it, a good gross profit margin. Furthermore, Can-Be appears to be more than capable of meeting its short-term obligations. The company has a current ratio of approximately 1.9 times, meaning that it has nearly 2 times more current assets than current liabilities as of the time this article was written. Of course, investors are always encouraged to, do their own due diligence and make sure that, they're up to date on the information. Canby also appears to perform strongly whenever there's good news. With a market cap of around just 3.49 million, Canby is a nano-cap stock. With the potential growth of this space, a nano-cap stock in this industry such as Canby Corp, could see big potential upside. The company only has 6.088 million shares outstanding and an approximate 84% float shares to outstanding shares ratio. So this type of environment has the potential for companies such as Canby Corp to see pretty awesome returns. There is also a general feeling that with the Biden presidency, restrictions could become even looser. But why Canby instead of a different stock or an ETF with broader exposure? This is a potentially strong company that may be more than just a company in the MJ sector. So Canby is known as a health and wellness company at their core. They already have well-known brands such as Canboila, 7 Caracas, New Wellness, Pure Leaf Oil, Pure Health Products, and Green Grow Farms. Canby also uses a greatly effective multi-channel distribution channel to reach consumers, including medical facilities, doctors' offices, retailers, online, and direct. Canby is so much more than just a provider. They now appear to be providing nutritional supplements and medical devices. Canby Superfoods brand is a new line of nutritional supplements for consumers such as goji, maca, chia, flax, lecithin, matcha green tea, yerba mate, and vegan probiotics. Additionally, back in October, Canby partnered with Dr. Carl Zars and launched Immune X2. Immune X2 claims to be a super immune boosting AMPM supplement. It also claims to be built on a physician-developed immunity optimization formula and claims to use a proprietary customer blend focused on immune system optimization. Canby's Duramed line is arguably the most exciting project in the pipeline. However, Duramed combines medical devices with MJ products and combines wearable bioelectric devices for the delivery of sustained acoustic medicine, or SAMs. This product appears to be so ahead of its competition, though, because the SAM Pro 2.0 claims to be the first and only FDA-cleared wearable low-intensity ultrasound device that delivers multi-hour treatments to accelerate healing and improve function of musculoskeletal injuries, muscle, tendon, ligament, and reduce chronic pain without opiate pain medication. So if this is a company that catches your eye, head on over to their website, Canby Corp, a health and wellness company. You can click here, you can see all of their different brands. Canboila, Pure Health Products, Pure Leaf Oil, Duramed, that's what we were just talking about, Green Growth Farms, New Wellness, and Lifeguard SunGuard. You can also find in their Investors tab all the recent news. So guys, this was just an introduction to the company. If it sparks your interest, feel free to do more research. I always encourage anyone watching these videos, do your own research and due diligence. This video is not financial advice, and take a look. Let me know in the comments what you think. And last but not least, that's it for the video. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. And once again, this video was sponsored for Canby, with full disclosure details down below in the description. We're out of here. We'll see you guys in our next video.